Karina, tell us what's the verdict there?
Aisha, the verdict is looking fairly good because despite the miss on all fronts, whether it's top line, bottom line, or margins, most analysts on the street continue to be fairly upbeat on the stock. CLSA, however, and Kotak have a sell. Rest of the others, whether it's Nomura, whether it's Motilal, Jeffries, all of them have a fairly neutral to optimistic sort of calls on the company. And let me just highlight why Kotak and CLSA have a sell. Kotak is saying that Hero is expected to deliver an EPS CAGR of 7%, which they are not too optimistic about. They have a sell rating with a target at 3,000. They've also cut the earnings estimate by 10 to 11%. Now, do remember that the management has said that the margins pressure is something that will likely to continue over the next couple of quarters as well. They might be taking a price hike, which might again impact their volumes going forward, because given the fact that Bajaj is now looking to slash down the prices in order to gain more market share and boost their volumes. Apart from that, CLSA also has a sell call. They say that the only good point that the management did highlight in yesterday's con call was the fact that the rural market demand is really picking up, and it's likely to continue going forward. But other than that, they see a lot of pressure on the margins going forward as well. But most of the other people have a consensus buy call. Jeffries, however, continues to be neutral and has a hold, but they say that because of the rural uptick, it is going to be the biggest beneficiary, and given that the very strong dealership network that the company has, the very strong brand recall that it has, something that even the management boasted of in the con call yesterday, they said that on back of these parameters, they will continue to post very strong volumes, and the performance will continue to do well going ahead as well.
We've delivered the highest ever quarterly volume of 2.1 million. We have gained market share in deluxe segment, where we're already number one, further strengthening our leadership position. EBITDA margin for the quarter stands at 15.6%. This is despite significant increase in material costs. This reflects resilience of our portfolio, our pricing power, and dynamic spends management.
Okay, that's all about news that you needed to know this morning in terms of earnings reactions expected. We'll take a short break on that.